Think about this for a second. There is a company that controls more than 80% of all US rocket launches. It runs the world's largest satellite internet network with over 12 million subscribers. And for 24 years, your entire adult life, maybe you could not buy a single share of it. Until now. On June 12, 2026, SpaceX goes public on the Nasdaq under the ticker SPCX at $135 per share at a $1.77 trillion valuation. This is officially the largest IPO in stock market history. The question everyone is asking right now, the one flooding every finance forum, every Reddit thread, every Discord server, is the same question you're probably thinking. Should I buy it? That's exactly what we're going to answer today, all of it. The numbers, the risks, the hype, and what a regular investor should actually do with this information. Let's get into it. My name is Yang and I spend way too much time thinking about investments, how to grow my money, how to spot the difference between a real opportunity and an expensive mistake, which I did before, and how can I stop letting hype make decisions that math should be making. If you're someone who wants to understand the SpaceX IPO completely before you decide anything, hit subscribe and give this a thumbs up if this helps you out. Here's the thing. The SpaceX IPO is one of the most interesting financial events but it's also one of the most psychologically loaded ones, and the investors who make smart decisions tomorrow are going to be the ones who understood all of this tonight. Let's build the full picture. Before we talk about the price or whether to buy, you need to understand what you're actually buying, because most people think of SpaceX as a rocket company, and in 2026, that is only 1/3 of the story. SpaceX today is actually 3 businesses under one roof. Segment number 1. Space, the rockets. This is Falcon 9, Falcon Heavy, and Starship. SpaceX controls over 80% of all US rocket launches and is NASA's primary launch partner. Its revenue in 2025 was about $4 billion, but here's the part most people skip. The space segment barely breaks even. Starship development alone cost over $15 billion to build and is still burning $3 billion per year in research and development. Segment number 2. Connectivity, Starlink. This is the real money machine. Starlink is a constellation of over 10,000 satellites beaming the internet to 12 million subscribers across 160 countries. And guess what? Its revenue in 2025 was $11.4 billion. Operating profit? $4.4 billion. Starlink is not just profitable, it is the engine subsidizing everything else SpaceX does. Segment number 3. AI to XAI. This is the one that shocked me when I dug into the numbers. In February 2026, SpaceX absorbed Elon Musk's AI company, which is the XAI, in an all-stock deal. XAI includes Grok, the AI assistant, and X, which is the formerly Twitter. The combined revenue in 2025, it was $3.2 billion, and the combined operating loss, $6.4 billion. When you buy SPCX or SpaceX at $135 per share, you are buying rockets, satellite internet, and AI ambitions, all 3 in one stock, whether you wanted all 3 or not. Here's what most people don't realize. The AI segment is currently losing money at a rate of roughly $2.5 billion per quarter. That is not a typo, $2.5 billion every 3 months. Alright, let's talk about the actual financial numbers because this is where the story gets complicated. The total revenue in 2025 was $18.67 billion, which is up 33% from the year before. That is an impressive growth at this scale. And the net loss 2025, that was $4.94 billion. This reversed a $791 million profit from that 2024. The entire reversal was caused by absorbing XAI's losses. But in the first quarter of 2026, the net loss was $4.27 billion. Just in a single quarter. Total liabilities, $60.5 billion, primarily from the XAI merger. Long-term debt, $29 billion. Now, you might be thinking, Yang, those losses are scary. Does that mean SpaceX is in trouble? No, not yet, because Starlink is consistently profitable at the operating level. The losses are entirely coming from the AI segment, which means that SpaceX is betting it will eventually become the most valuable part of the company through the orbital AI data centers and the next generation infrastructure. The S1 literally says SpaceX plans to begin deploying orbital AI compute satellites as early as 2028, essentially data centers in space powered by Starlink's connectivity. So if that works, it changes the entire value equation. If it doesn't, you've been funding an AI moonshot with Starlink's profits. This is where it gets really interesting because the 1.77 trillion isn't pricing what SpaceX is today. It's pricing what SpaceX could be in 2030 or maybe 2035. That's a bet, not a business valuation. Let's talk about the number that matters most before June 12. The 1.77 trillion. SpaceX made 18.67 billion in revenue in 2025. At the 1.77 trillion valuation, you are paying approximately 95 times yearly revenue for this company. So let's compare that to some companies you know. Okay, Apple is one of the most profitable companies in human history and trades at roughly 8 to 9 times revenue. Nvidia, the AI darling of the decade, trades at around 25 times revenue at its peak. SpaceX IPO, 95 times revenue. Look, that doesn't automatically make it a bad investment. Tesla traded at extreme multiples for years before growing into its valuation. But here is the honest math. Morningstar, one of the most respected independent research firms in finance, puts SpaceX's fair value at $780 billion. That's less than half the IPO price. That's a 127% premium you're paying on top of what an independent analyst says the fundamentals for today. Guys, remember this. You're not buying SpaceX 2026 at $135 a share. You're buying SpaceX 2032. And you're probably hoping the company catches up to the price you paid. Let's go back to the S1 filing. Here's something I want you to actually look at. This is the risk factor section of the SpaceX S1. It is 38 pages long. Companies are legally required to tell you every way their business could fail. Most people never read it, and I want to highlight 3 things buried in here that the headlines are not covering. Okay, risk number 1. Elon Musk controls 79% of the votes. You are buying Class A shares. Musk holds Class B shares with disproportionate voting power, giving him roughly 79% of all the voting control. This is disclosed on page 1 of the S1 filing. It means that as a shareholder, you have virtually zero say in how the company is run. For example, if Musk decides to pivot the entire company to Mars missions next year, he can do that even without your approval. Risk number 2, the SpaceX own filing warns of bankruptcy risk. The prospectus states, and I just want to be clear, this is in SpaceX own document, that there is a quote, genuine risk of bankruptcy. If Starship fails to achieve a launch rate of at least once every 2 weeks. That's not a critic saying that, that's the company telling you in their own filing. The risk number 3, the 366-day lockup cliff. Every single insider, employees, venture capital firms, early investors, or angel investors is locked up from selling for 366 days after the IPO. So, June 2027 is already marked on every institutional calendar, and when that lockup expires, billions of dollars in shares become eligible for sale at the same time. That is a known scheduled supply event, and I know you guys that know that supply events tend to pressure prices. Okay, let's get practical here. You've heard the risk. Here's the mechanics of how regular investors can actually access SpaceX. Route number 1, IPO allocation is very limited. Brokers like Robinhood, Fidelity, and Charles Schwab are participating in the IPO. You can request shares at the $135 price, but remember that allocation is not guaranteed. Institutions get the majority. Most retail investors who requested shares will receive little or none. And route number 2, open market on June 12. Once SpaceX opens on Nasdaq on June 12, any standard US brokerage account can buy it at whatever the market price is. This is how most retail investors will access the stock, and mind you guys, you will almost certainly not be buying at $135 because many people are interested to buy it. So you'll probably get it at $300, $500, or maybe $1,000. This is because the open price will reflect the first day demand and the price will skyrocket. Route number 3, you have to wait for the first earnings, which is the smartest move for most people. SpaceX's first earnings report as a public company is expected in early November 2026. At that point, you will have one full quarter of real, SEC disclosed public financials to make your decision. The IPO hype will have faded, the stock price will have found a more rational level up or down, and you'll be buying based on data instead. Here's the bottom line on the SpaceX IPO, guys. Is SpaceX a great company? Absolutely. The technology is real. Starlink is changing global internet access. The Starship rocket, if it works at scale, rewrites the economics of space entirely. The hype is real. The story is incredible. But here's the thing. Big companies and good stocks at a great price are 3 different things. And on June 12, you're only guaranteed the first one. If this video helped you think more clearly before you make a decision with your money, please hit the like button. It genuinely helps more people find this content instead of just buying based on headlines. Subscribe and hit the bell. I post every single week on crypto, investing, and personal finance for people who want to make smarter decisions with their money, not just exciting ones. So, are you guys buying SpaceX on day 1 or are you waiting? I want to see your comments below. See you in our next video. Bye!